Hello, this is Jordan. This video is being recorded for Tuesday, January 24th, 2023. Thank you so much for joining me. In this video, I'm going to take a very quick look and update us on how gold and silver are performing against the stock market. And since I started making videos, I want to say 2015 or 2016, this has been something periodically I've always looked at, especially gold against the S&P 500, because as I've said way too many times, for precious metals to get into a real bull market, a real sustained bull market, we have to see these ratios outperform the stock market and trend higher considerably, not just for a year or two, but beyond that. And if you look at the structure of both these ratios, we have a potentially a really significant base that has taken shape. And just to go back for a second and what I said before, take a look at what happened in 2016 in these ratios, and then also August 2018 to August 2020. So you can see the that cyclical bull market, which was 2 years, 24 months, you can see that these ratios did rise for pretty close to 24 months. They peaked out at the COVID crash bottom at the end of March, just as they peaked out in early 2016. But again, these are leading indicators, so the huge moves higher, those are really strong signals that money was going to start to flow into precious metals. But in both those cases, we can see the ratios. I mean, look what happened, especially with gold against the S&P 500 after the peak in early 16, then the peak in early 20. They declined some, then they had a rebound, but they made a lower high, and then after that, they just fizzled out for a couple of years. I mean, after 2016, it was even more than that. It was about the same. It was a couple of years. But anyway, so looking at that, getting back to where we are now, this is a really bullish setup, given that, there's still a lot of work to do for both ratios, but this is a really bullish setup. There's clearly two key resistance levels here. You can see the red lines, each ratio is dealing with those two key levels. Looking at gold, it's about 0.50. That was the high in 22. And so if gold is able to take that out, and with some real momentum, where there's no question, it doesn't just take it out for a day, then you're looking at, well, first of all, you get a real breakout above 0.50. That will have a measured upside target of, close to 0.60. So based on that breakout, you're going to get or approach that significant resistance around 0.65. And obviously, if, when the ratio breaks above 0.65, you're looking at, that's almost, that's what, a 9-year base at this point. So, that's a really significant break. You don't need me to say that, but the significance of the breakout is that breakout is probably going to come. I haven't looked at it too closely, but I don't know. Maybe gold breaks above 2100 before before the ratio breaks above 0.65. But you can't have gold making that breakout running to the first target of 3000, the measured upside target. The only way that happens is gold, this ratio breaks above 0.65. So that's why that's really important, obviously. And looking at this bottomed at the end of 2021. So again, it breaks above the first line, eventually breaks above 0.65. That's a real bull market for precious metal. And not because gold can break out and run to 3,000. It can do that in 18 to 24 months. Whenever it really starts moving. But this ratio breaking above 0.65, that suggests that you're in a real new structural bull market, a secular bull market that's going to last obviously more like a decade. It's not just going to be a 1 or 2 year thing. Same thing for silver against the S&P 500. That ratio has actually made a stronger move since the bottom in the summer of 22, but that has been a function of silver obviously been underperforming for a while, and we know that silver bottomed first, so it's been really outperforming. But in the last month, it's actually been underperforming. But looking at the moving averages, silver against the S&P 500, the 200-day moving average is there. What I like, and if you look at that last arrow, which highlights, I like the fact that silver, it successfully tested the 200-day moving average, but before that move came down, it made a slightly higher high. It comes down, it tests the moving average support, then it makes a considerably higher high. So I mean, there's some real bullish momentum behind that ratio. Coming down, it should hold around the 200-day moving average. Now back to gold against the S&P. I threw in the 400-day there in red because that's been more significant going back to the beginning of 2016. I mean, if you're looking at following the trend. And so gold held above, or the ratio held above the 400-day twice since last October. And, the ratio is above the 200-day as well. But, we'll see what happens over the next month or two. This could be the real test. I mean, do we get is the stock market, does it have a little bit more juice? Can it rally another 5 or 7% here? You'd get the ratios selling off. But, looking beyond that, if the stock market has that rally, these ratios should probably come down and correct a little bit more. But if the stock market rolls over again, it starts to discount recession, we see more selling, and the S&P looks like it's going to retest 3,600 again. Looking at that, I don't know, next 3, 6, 7 months, whatever. That's the environment where, first gold should really gain. And, at that point, gold would be easily above the 0.50. So I'm thinking way out in advance, but, that's a potential scenario as to how this could play out. But the first things first, we got to see these ratios take out that first line. I think they're going to do it. And, at that point we can review, and it'll be really exciting because, when they take out 0.65 and 0.008 as far as silver at the bottom there, that's going to set up more than just a 1 or 2 year move. So definitely have to keep an eye on these charts. I don't know if they're ready to make big moves yet as far as the next couple weeks or the next month or two, but we'll see. Maybe I'll be wrong. Hopefully I'll be wrong, and we'll see things play out here more bullishly than I expect in the short term. I know there's a lot of talking for one chart, but let me know what you guys think. Maybe you see something there, you think about something in the markets or the economy that might impact these ratios, something I missed. Let me know, leave a comment. Thank you for tuning in, and I'll see you guys again in the next video.